I don't
Yeah.
think the cat block Wi-Fi will let me do that.
Okay, guys. Hello, my name is Jatin and this is Nishit. We are from the EcoFin cluster and we are having a roundtable for the month of March. And over to Nishit.
Okay, so as we had decided, our topic for this roundtable is going to be about the Silicon Valley stock crash that had happened recently. So let's just start by talking about what might be the global impact of all this and whatever has been going on. So let's just start with a quick introduction. So anyone?
Can I start?
Yeah, I'll begin.
Can I start? Yeah, sure.
Yes.
Yeah, so the Silicon Valley Bank, basically what it used to do was that it used to give funds to the startups, and it has been in this business since a long time. But because of the recent developments in the global economy, like the Russia-Ukraine war and the COVID pandemic and all those things, there has been a rise in the rates, which is being done by the Fed. And because the bond prices started to fall because of the rise in the Fed, that's why basically this whole crisis began in the first place.
Rishabh, if you wanna add to it.
I mean, yeah, pretty much. So I guess, yeah, as she said, the bond prices started falling. Firstly, Silicon Valley Bank, I think they had a huge growth between 2019 and 2022. At the time of the crash, it was like the 16th biggest bank in USA. And with all the new deposits and all, they were like investing in these long-term debts and all. But what happened after these rates started falling is many of the customers like they just went on a frenzy and they began to withdraw funds. Uh, but what happened is because it was not that liquid, they could not provide all the funds to their customers. So I think they had to sell some of their investments and they lost something like $1.8 billion. And the next day, the stock price of the SVB Financial Company, which is a holding company of the bank, it crashed. And then what was the name for that? I think the financial regulators had to take over the company basically after that.
Yeah, so that is basically how it happened. And so when we understand and analyze this, even when the 2007-8 crisis happened, people started by saying that it was the housing bubble crash that happened, housing bubble burst. But then we got to know certain external factors that contributed that to that also. And I think then, which comes to the question of what are the other factors that contribute to the pricing at the SVB bank, regardless, regarding the prices falling and all that. And would this all have been prevented at certain point, or was it known to certain people at certain point? So that is one of the primary questions that I think our viewers would want to listen. So yeah, Aryan, you can go ahead on this.
So, so one of the major reasons, like it didn't happen in one day. So one of the reasons was that due to its involvement with the Greensill Capital of UK. So the Greensill Capital of UK was a financial service company that provided supply chain finance to different companies. In the last in 2021, this Greensill Capital was involved in some financial issues due to with one of the major factors being that it had a small number of large clients, and this along with reckless amount of money given as loans led to its downfall. So this I think that the chips started falling for the Silicon Valley Bank back then only.
Yeah. Uh, Sanya would like, do you want to add
Yeah,
something to
so
it?
Yeah, so add to it, I think factors like the Federal Deposit Insurance Corporation did not cover up 93% of the Silicon Valley Bank savings, so that made it susceptible to a bank run. And even they had invested in the held to maturity assets that and they were not considerate enough of their short term requirements. This made it difficult for the bank to meet the demands of the Silicon Valley investors. Also, something that I found intriguing on this was that many of them brought up myriad other reasons like the bank's loans to environmental and community projects, or the bank being an outlier of the diversity goals and ESG investment have been propped up to the shore to make for a rational explanation for this crisis. However, a professor from Harvard Business School said that blaming the collapse on such initiatives reflected either a complete lack of understanding of how banks work or the intentional misattribution of the causality. And when we talk about signals, I feel the head of Federal Reserve much earlier in November said that the rise in interest rates was imminent given the high rates of inflation in US. But Silicon Valley Bank chose not to take any action to reduce the risk associated with the potential increase in the interest rates.
All right, thank
I would
you.
like to add another point.
Just a minute, Aditi. Chetan has his hand raised from a while.
So just coming back to the question that you had asked, Nishit, about what is the global economic scenario when all of this was happening. So I would just like to bring this back to 2019, 2022, when the economic situation was extremely dire and the interest rates were at an all-time low, because as economies function, as the world economy was functioning, we had to keep the interest rates low so that we could increase the flow of capital all around, so that we could increase investment, so that we could increase that all the jobs that were being lost, so that we could just keep the economies afloat, because of the dire economic situation that was back then. And Silicon Valley Bank, as somebody has already mentioned, was a banker to these two startups. And startups benefited the most during this time because of this free flow of capital. So now as venture capitals churned in the money into these companies, where they deposited it was the Silicon Valley Bank. But at the same time, because of the availability of capital to the startups, Silicon Valley Bank was not churning out the deposits in as much frequency as it was taking in the money. So how it divided the assets, how it divided the deposits was it either could have it either could have invested in available for immediate sale, like short-term assets sort of, or it could have deposited in long-term assets which are supposed to be held till maturity. And some of these assets, and yeah, so what Silicon Valley Bank did was, rather than balancing its portfolio, it ended up getting greedy, and it ended up, rather than investing in available for sale assets like, let's say, government bonds, which have a smaller interest, a slightly lower interest rate, they invested in slightly riskier bonds which had, let's say, 2% interest rate, such as the real estate ones. So now when the government started coming up, and somebody mentioned that the interest rates were going to be increased anyhow, that you cannot survive an economy with such low interest rates anyway. So now when the interest rates started increasing, the yield that was to be supposed to have come from these held till maturity assets, they started going into losses. So now, and also what happened was that the startups, the so now the venture capitals had stopped churning in the money, and now the startups were tapping into their deposits so that they could keep functioning, so that they could keep paying their vendors. But what the Silicon Valley Bank had done was that it had tied up all of its deposits sort of into these long-term held till maturity assets. But now, because the deposits were called upon, they had to sell these assets at a loss. So this is largely what the crisis, largely what the crisis largely why the crisis happened. And also, as somebody has also mentioned, that Silicon Valley Bank had a very niche customer base, not have a diversified customer base, did not have a diversified investment portfolio. So these are largely the major factors that contributed to this. But
Right.
also,
Yeah.
one of the reasons we shouldn't be this concerned, because it's largely to do what Silicon Valley Bank was doing wrong than the economy as a whole.
Yeah. So I think Aditi, you wanted to add something to this.
Yeah, I wanted to say that, were there any signals about this, or were there any warning signs for the Silicon Valley Bank? So it was observed that there was a significant asset rise during like the 2019s, and also because Valley Bank's reliance was largely on homogeneous depositors, and there were concentrations and in investments and liabilities also. So, because there was a rise in the asset, so there obviously would be a rise in the risk. So what they had to pay attention was that with the rise in the assets, the rise in the risky assets was also there. But the rise in the risky assets was way more than the rise in the total assets of the bank. So such significant rise in the deposits obviously made it possible for the bank to like give loans and or due to the COVID-19. But it also happened and the deposits also happened because during the COVID-19, people didn't want to like invest a lot. So they just deposited the money in the banks. So the risk managers had to make sure that what would happen if the to the bank's liquidity when the investors who have deposited such large amount would take it back as quickly as they had come in. So if they had paid attention to this factor as well, they might have done something about this crisis.
Right. Yes, all good points. Globally, there were many short-term fluctuations which no one could have predicted, and that made consumer behavior maybe irrational, or they did what they felt rational was at a time. So bringing it a bit closer to home, what impact do you think this crisis at SVB has on banking stakes that are in India? And also, if there's any way the government could have regulated it or responded to it, like Aditi had suggested, if they would have focused on the liquidity. So if you bring it closer to home, are there any ways we could have avoided it, or how will it impact India? How did it impact India?
What I feel is that the impact of the Silicon Valley Bank won't be a lot in India. It might affect just the tech startups or the IT firms because these companies are the ones which rely mainly on the foreign investments, and they might face a challenge in like raising the capital due to the banking crisis. However, the other sectors might not get impacted that much when it is concerned with India.
I have a slightly different take on this. I feel the causes of the crisis are believed to be a combination of the poor risk management practices, inadequate internal controls, and also a lack of regulatory oversight. So, this could lead to a decrease in the consumer confidence, which could result in a decrease in deposits and a corresponding decrease in lending. In addition, it could lead to a decrease in the availability of capital, which could have an especially detrimental effect on the small businesses and startups, even in India. And this could lead to a tightening of regulations, which could lead to higher operational costs and a decrease in profitability for banks and institutions. To ensure that similar issues do not arise in future, the government and regulators could take steps to strengthen the regulatory oversight and improve the transparency, I feel.
I would like to add to this that the regulation of this is a huge part for the answer because let's take Silicon Valley Bank a crash. There was this Dodd-Frank Act, right? And what that stated is that banks with more than $50 billion in assets would be like subject to more oversight by federal regulators and all. But I think in 2018, Trump signed this Consumer Protection Act, where they set the threshold for 250 billion instead of 50 billion. And while this was still a huge bank with about 210 billion in assets, they were not subject to that additional oversight that the federal regulators would have, and which they had to provide post the crash. And yeah, I think added to all those answers, it comes down to tighter regulations.
Shreya, you can go ahead.
Yeah, there's based on some analysis, there's been some sort of smaller impact on a few, mainly IT companies in India. These sorts of companies who have invested in SVB. But then there's not really much of a long-term concern for these banks in India specifically, because the proportion of these sorts of banks, these companies who have invested in this bank is actually quite low, and so there's not really much of a worry about any sort of labor market changes or fluctuations in the long run, or if any of these companies in the long run will actually face some sort of, detrimental loss or detrimental casualty in India, at least at this point.
And Aryan?
Yeah, so I think this is a great opportunity for the Indian banks. So since in Indian startups are heavily dependent on foreign investments due to the reluctance of the Indian banks to lend money due to its bad experiences with lending money to um, different companies and individuals. This opens up a new frontier for Indian banks to lend more money, and so that Indian startups could collect funds locally as compared to going abroad or for looking for foreign investors.
All right. Yeah, so that's also a good point on how we can do the regulations. All right. So moving on ahead. So how do we think that this bank crisis would have an impact on public trust? Like Sanya brought it up, that there might be, consumers might not be they might not feel as safe as they did earlier with the banks. So how do you think it impacts the trust of consumers in India?
And also, before coming to the question, I would just like to add one point. I think one of the long-term impacts of this, collapse would be, so if you've seen, there were 400 VC funds, like venture capital funds or venture capital companies, that issued a statement regarding the support with SVB Bank, because SVB Bank is a major funding unit for startups. And India being one of the, hub of startups, they have a lot of companies that are being funded by, first of all, like if you want the example, Sequoia Capital. Sequoia Capital supported SVB Bank for the collapse, and Sequoia Capital has a lot of Indian companies in their portfolio. So if you see the flowchart in this scenario, if as Chetan mentioned, that one of the factors was the venture capitals who hold these stocks and then sold it at a very low price. And if the venture capitals are affected, the funding in India would be affected in a manner. So that is one of the major long-term impacts I feel will come from this SVB bank collapse. And then coming to the question, it will impact public trust in the banking system in India in a sense where, again, so in India, there have been very less, I would say, situations where there are bank runs happening. But this is I would say, lesson for banks in India to operate at a certain level where they are more regulatory in terms of where they are, having their depositors placed. So that is one of the things that I would mention, and then you can continue on that.
Also, so along with this, so let's say that as a consumer at the bank, and there's all this crisis happening. So what do you guys think that what steps can we personally take to ensure that we don't get the complete backlash of such crisis? Yes, Sanya.
Yeah, so I feel individuals and investors can take a variety of steps to protect themselves from bank failures or crises. First, it is important to diversify the investments across different types of asset classes, for example, stocks, bonds, real estates. This will help them reduce the risk as well as reduce the chance of large losses from a single event. Second, I think it is important to research a bank before investing money or taking out a loan and make sure that the bank is properly regulated and has a good financial health, though it might not be. These are the very general steps that can be taken and might not be completely applicable in this sense, but that is something that in a usual investment they should take.
Yes, falling on to Chetan, if you'd like to add something to that.
Just that I completely agree with the point that we really, as investors, we need to diversify our portfolio and not simply just park our money in a bank. And linking it with the previous question, that we can ask our policymakers to have a higher liquidity ratio, like require, such as, for example, Europe, the liquidity coverage ratio. There's a high quality liquidity asset ratio, such as a short-term government debt that can be sold to fund banks during a 30-day stress scenario. So something like asking our policymakers to look outside and apply such practices rather than just stopping.
Yeah, so that's true, right? I definitely agree with Chetan on this. So when we collectively understand this whole situation and how India will be affected by it, what uh, what are the guidelines do you think the banking industry should take from this? Like, this is a follow-up to the last question only. But so if you see, 10 years down the lane or 5 years down the lane, and if you see a similar behavior, not only with the SVB bank, but major banks that have, Indian investors' money parked in it, such as, if for example, Chetan had an example of how Nazaro Technologies also has a huge fund parked with SVB bank, right? So what do you think will happen in the next 5 years if this situation occurs again and again due to certain reasons for India?
Considering like India is growing up to be an investment hub and so
Yeah.
many startups are coming up here, a multiple failure, a continuous failure in banks with multiple deposits would lead to probably a really like a global economic depression, if I can say, a loss of jobs throughout. So firstly, I believe India, like it has already started happening, but a lot of these Indian startups have now started parking their funds in the IFSC center banks, the International Financial Service Center in Gujarat, banks there. So like an immediate impact of the SVB collapse would I feel like they're going to come back home. And India also needs to sort of gear up and improve its risk compliance, its governance compliance with respect to banks so that Indian startups can also look at banks back home rather than simply parking them abroad.
And secondly, I personally feel that India is a very volatile economy in the sense of it is governed by a few of the huge investors. So, for example, even if you take the example of Adani in a sense, how one man's stock market crash, was affected so many companies in India. And like, if we continue with certain bank crises and seeing the current scenario of how UK is in a recession, US is not doing very well when it comes to economics, the next 2 3 years will be very crucial to again build economies back. And India being one of the developing nations with a very huge, with a good growth rate right now, which is better than US, which is better than UK. India just passed UK as an economy to become the fifth best economy in the world. It will be very crucial in the next 2 3 years to build this economy and always, boost the startups because India is again growing with a huge pace. Okay,
I
so
want
I'll
to add
just,
something.
yeah, Sandhya.
Yeah, so I feel though at right now these layoffs are very limited to most impacted sectors, but in the long run, these bank runs by ordinary consumers could cause a panic, leading to a nosedive in the consumer spending and massive job losses as firms react to the cratering of demand. So it's very important to contain it here.
Exactly, I agree to Sanyam because again, like if you have seen past crises were boosted by the bank runs of the depositors and they, failing trust in the banking system. So it is very important that the consumer trust the banking system, the government, and and basically how they have basically trusting where their money is, and not have multiple bank runs. So that's there. So I think that this is where I think we had a very insightful discussion on this, and I think that's where we close. I like Nish to take over from here and just to conclude the roundtable.
Yeah, so that was our roundtable for this month. Just let me stop recording.